All right, look, there's obviously a lot of noise in the market. People are freaking out, including myself. Bitcoin's price has dropped a lot. The market has tanked. All coins have been bleeding a lot. So, this video is actually pretty important. In this video, we're going to be talking about three charts that pretty much everybody's looking at in Bitcoin that you should be aware of. And if you're not aware of it, this is a video for you. Keep watching. What's going on, everybody? Alex back with another cryptocurrency video, and today we're going to be talking about Bitcoin's price. Okay, there's three charts that everyone's looking at. I need to update you guys on exactly what's going on. My goal here is to not draw conclusions from these charts. My goal is just to show you my research so that you can piggyback it with your own research and make your own decisions. If you appreciate these videos, smash the like button. If you're new to this channel, my name is Alex. Nice to meet you. I talk about cryptocurrency, entrepreneurship, and my proposition for this channel is that I give you guys the complete and total truth and back up pretty much everything I say with evidence, hence this video right here. So we're going to be talking about three charts, three massive Bitcoin charts that are really important for your cryptocurrency success. So I highly advise that you guys stick around, pay attention, take notes, do what you have to do, pull up the charts for yourself, and definitely take action. The only reason I make these videos is for you guys to flourish and to prosper off of my research. Let's look into the charts. Let's get right into it. So as you can see right here, we have Richard D. Wyckoff. If you guys have been looking, if you have under a shell or something like that, you probably haven't noticed the Wyckoff distribution model, which has pretty much been going viral in cryptocurrency. Everybody's watching it because people claim it kind of predicted the top. Now, it has since become slightly invalid. I will say that, but it's important to understand because everybody's looking at it. Now, whatever conclusions you draw, that's up to you. First things first, this guy basically in 1873 and through 1934, he was a 20th century pioneer in the technical analysis approach to studying the stock market. He was considered one of the five titans of technical analysis. Okay. Now, he observed numerous retail investors basically getting taken advantage of by institutional investors. These guys, whales, which we know there's a lot of institutional demand in Bitcoin. These whales have been manipulating us for hundreds of years, as you can see here. So he came up with some models to basically predict that. He got fed up with these guys taking advantage of everybody, and he wanted to help the public. So this is basically how you follow smart money. Now, my goal here, again, is not to go over completely and make any conclusions. I'm just going to show you what happened. I'm going to show you why it's slightly invalid. And from there, we'll move on. So there's basically a couple of phases that he has in different models. We have the accumulation area, we have the overbought area, or the distribution area. Okay. Now he has different models to, distinguish both, but what we're looking at primarily is the distribution area for the top. Okay. Because basically Bitcoin's price looks like it kind of came to the top, as you can see here. So we'll go over all those details. Now, this is an actual the Wyckoff distribution model on like physical form in Bitcoin's price. So we'll kind of compare and contrast where it should have gone, and it didn't go that way. And you should definitely take into consideration. So the first thing is PSY, or preliminary supply, where large interests begin to unload shares in quantity after a pronounced up volume. Volume expands and price spread widens, signaling that a change in a trend may be approaching. So what they're talking about is this area right here, PSY. So we have kind of like a big push, and this is where we indicate this right here, large candlestick right here showing more interest, which brings me to the next part, which is BC. As you can see here, buying climax, during which there are often marked increases in volume and price spread. The force of buying reaches climax with a heavy, urgent buying by the public being filled by professional interest at the top or near a top. So as you can see here, we had a big pull back, which brings us to our next phase, which is AR, automatic reaction, with intense buying, and I actually bought it around this point too, substantially diminishing after BC and heavy supply continuing. Okay, AR takes place. So this big pullback here, we hit AR, and then people kind of buy up a little bit more, which brings us to SOW. So basically SOW shows sign of weakness. But before that, we have ST, which is a secondary test. As you can see over here, it's kind of swapped. We have SOW here and ST here. So it's a little bit different, but secondary test in which price revisits an area of BC to test demand and supply balances at these price levels. Guys, again, this is not a video to be extremely long, explaining every little detail. It'd take me like 3 hours to really explain this. So I highly recommend you go to schools.stockcharts.com to look at the complete, because there's two different distribution models, and you can kind of compare and contrast and use it for your own research. But I just want to make you guys aware of it. So as you can see here, we have the ST, right? Secondary test, which brings us to the SOW at the bottom here, which in this case, it was a little bit ahead. Observable as a down move or slightly past the lower boundary of the TR, usually occurring on an increased spread in volume. Now, which brings us to the last point of supply. If we come over here, you could see that the last point of supply is around this area. There's obviously a couple in between, but look at just the comparing. Obviously, there's a couple in between, but just look at the compare and contrast. It looks pretty identical. Okay. We have the UT up here, UT up here. It's pretty accurate, I will say, up until this point right here. Okay, so literally SOW, it should have, this guy basically drew it out, this yellow line, should have done something like this. We had a little bounce. Now it doesn't even match the other distribution model they have because he has two different distribution models. Neither of them match, but it looks pretty accurate. If you were to put this on a percentage basis, it looks like maybe a 70% correlation. Pretty much this chart's been going viral and everybody's looking at it. People are saying that it's like a self-fulfilling prophecy. People are saying that it's actually accurate. The way I look at it is that this guy created it for institutional demand. This guy basically made this for the smart money, the big whales, which have been a big manipulative factor. We have Elon Musk, we have all these billionaires coming into play now, and they will take advantage of people at first sight. So I highly recommend you guys research the chart, use it in your trading, try to see if you can find it again in the future. I will be using it with my trading, and I'm in no way, shape, an expert in any way, shape, or form with this chart or with this method, but I'll be using it in my research moving forward, and maybe I'll make an update video. If you guys want me to talk about this more, leave a comment below and we'll definitely jump into it. But there's something else I definitely know a lot better than this, which is a death cross. Okay, the death cross is basically it's typically drawn with the 50-day moving average and a 200-day moving averages. I'm going to show you guys exactly how to pull it up, but basically it's kind of the opposite of the golden cross. And I kind of went through the history of the BLX to show you basically what happened, and we numbered it out for you guys to make it easier. But as you can see, we're coming up to a point and everybody's talking about this. And all you have to do to pull this up is go to right here, indicators, type in MA, moving average, and then you could edit the moving average right here by picking the length and time. So you could do one for 50 and then do one for 200. And then people typically look at the 20-day moving average as well. Let's just throw that in there. And that's the yellow line. It's kind of ignore that one. But Bitcoin, basically, if we're looking at this price, and the reason why we use Bitcoin is because it has the biggest institutional adoption. It has the best use case. I mean, obviously Ethereum's better, but it's not guaranteed yet. Bitcoin is the big face. It's the big name, has the most money. It's just the one that everybody looks at to make their decisions for the whole market. If Bitcoin goes down, the whole market generally goes down. So this is the one you want to do most of your technical analysis, at least for long term, at least to understand the trend. Definitely use Bitcoin. But as you can see, we have a couple of levels we need to break above. You can use it as support and resistance. So right here, we're looking at the 200-day. Let me just make sure. No, we're looking at the 50-day for the blue, and then we have the 200-day for kind of the light blue right there. So the 200-day moving average has been consistently rejected in the past couple of days. You can see it's been trying to get above it, hasn't really gotten above it. So you can use it as, in this case, resistance. For me, I would want Bitcoin to get above this point, then get above the yellow line, which is the 20-day, and then eventually get, of course, above the dark blue line right there, which is the 50-day moving average. But what a death cross specifically entails is when these two cross, that is considered a death cross. And it's actually pretty accurate in the history of Bitcoin. What I'm looking at here is the BLX. If you're in TradingView, you could pull up BLX, this brave new liquid index for Bitcoin, basically the biggest data set for Bitcoin in TradingView that will show you all the way, the history all the way back here. So let's kind of go over it slightly. So we started here, then we had a death cross here, which kind of signaled the halfway point of this contraction. As you can see here, we have a 91% contraction. You would have saved a lot of money. If you would have waited for that death cross, you would have saved about 75% of your money. So it's pretty interesting. Then we had a golden cross where the blue line moved past the light blue line, which is the 50-day moving average, moved past the 200-day moving average. And you can see it didn't even break it a lot. Look, it just slightly went past it and then kind of trend together, which signaled the bull run. As you can see here, the bull run was started and big time gains from this point. If you would have traded just off the moving averages and then you waited for maybe the next one, which actually it's a lot higher than that because we didn't cross here. And I just want to point this out. This is why I have the blue arrow. This is actually a specific area where it kind of seems similar to what's happening now. So we could have a situation where it doesn't cross. We could have a situation where it gets really close and then just makes its way out. People are comparing it to this cycle. So it's something you definitely want to take in consideration. Do your technical analysis or long-term technical analysis. And we're looking at this, you can see that we crossed here as a golden cross. If you would have traded just off that golden cross, you would have gained a lot. Look, I can't even get the chart open. Let's kind of pull this down a little bit. The gains from there to the death cross would have been 10,000% gains if you would have just trade off these moving averages, which brings me to my next point. This is the second time we had a death cross, which signaled the bear run, right? It signaled the bear run. And if we take it, if you would have just traded off of that, took it here, came all the way down to the golden cross, which is about here, you would have saved 56% of your money, which brings me to the golden cross here. Now, we had a lot of volatility around this range, and not everything's perfect. Not everything's going to line up super perfect. That's just the way it goes. But we have like a death cross and then like another golden cross, whatever the case is. But if you look at the first one, this golden cross kind of signaled the bull run here as well, right? And if we would have traded off of that and just held the whole time, right, from right around this point right here, all the way up. Let me just make this chart smaller so we can get a little bit higher there. Yeah, right about here up to here, we have an 8,000% increase. You would have made a ridiculous amount of money. Then we have a death cross right around here, which signals the bear run again. And if we trade off of that, you can click here, bring it to the next golden cross, which is around this range right here. You would have saved 50% of your money. It's really interesting, guys. It's really interesting how accurate this thing gets. And if we take this, bring it to the next golden cross, which was right around here. We have the golden cross here. We have another golden cross here. Depends on which one you want to look at. Again, this is high volatility. This is also, the black swan event of coronavirus. So things are going to change, but you have about 100% increase around that range. And if you would have taken this golden cross right here as your trade, you'd be up into this point about 358%. So you can see it's been pretty accurate. It's not 100%, but people trade off of this a lot. And a lot of people are staring. It's one of the biggest indicators. Moving average is one of the biggest indicators in all of trading and, traditional finance as well as cryptocurrency. So it's something you definitely want to have, in your skill set and understand what's going on. Okay. So a couple of areas, again, I want to see this break above this moving average right here, which is the 200-day moving average. If we do that, then we might have a situation where this comes right here, just like last time. And then this one kind of comes like this and we never cross. And then Bitcoin rally continues. So this is what everybody's pretty much looking at right now. And this is why people have been freaking out, because it looks like we're going to cross, right? So people are kind of taking action ahead of time in this scenario. So definitely take this in consideration. All you have to do again is go to your indicators and put moving average and then edit the moving average to the 200-day and the 50-day, which brings me to my last point, which is logarithmic growth curves. This is used to predict longer time frame situations, especially with Bitcoin has the biggest data set in cryptocurrency. So you can use logarithmic regression to look at potential growth of Bitcoin in the future. So there's one that you could add in TradingView. The one that everyone really looks at is the, look into bitcoin.com, which look at that right after. But there's a couple conclusions you can draw, because if we look at this, we kind of draw this out. Let's say hypothetically, we play around this line here. If you really think about it, our low is still higher than last all-time high, which is, it's pretty interesting to know that, because it's a kind of bullish. If you guys are willing to stick it out for a long period of time, this can play out really profitable as long as you're not, making any irrational emotional moves. So again, as long as this continues here, when we break this, this is where I'll get really scared, right? As long as it continues, we should be fine. But this predicts a lot, right? For example, it predicts 100K Bitcoin. This is what everybody looks at. Now, the amount of speed we got up to the, halfway point of the logarithmic growth curve was unlike anything else before. So this pullback is kind of healthy. I will say this is a healthy, drawback. And then if we trade sideways or even a little bit downwards, eventually 100K Bitcoin can happen the beginning of 2023, the end of 2022. It's just kind of a longer time frame, I guess you could say, investing. You don't have to worry about the day-to-day, kind of just let your money ride. The logarithmic growth curve has been used by pretty much everybody in cryptocurrency, and everybody's looking at these charts. So yes, definitely take it into consideration. I'm looking at lookintobitcoin.com. And if you want to pull it up on TradingView, all you have to do is go to indicators. All you have to do is type in Bitcoin logarithmic growth curves. As you can see here, you click it. If you don't see it, it's because, okay, this is Bitcoin. You could just type in logarithmic regression as well. As you can see here, logarithmic regression on the weekly. If you don't see it, you just need to move your time frames to weekly. But as you can see, it's pretty accurate. We rejected immediately off of this. And, it just depends on where Bitcoin goes from there. Personally, I think it's going to probably do something like what I just drew here, probably come down a little bit to 20,000, 25,000. And then from there, I think a lot of people are going to start scooping it up, get a little bit more comfortable with cryptocurrency, more institutional demand. People are going to get the deals, and then the growth curve will continue, and we should make our way to 100K Bitcoin. It's just going to take a lot longer than we expected. That's it. It's just going to take a lot longer. 100K Bitcoin over here. I know this is a bad drawing, but this is generally what it'll look like. And yeah, it just might take a lot longer, which you can see it's saying, 2025, it's saying 2024. So, yeah, guys, patience is a beautiful thing. You should definitely take these in consideration. If you guys want me to make a longer, more in-depth video on this, leave a comment below. That's it for this content. If you like the quality of this content, hit like. If you don't, leave some constructive criticism. Subscribe for more video updates. And like I always say, if you don't get with it, you will get left behind. Thanks for watching this, guys. Catch you in the next one. Alex here. Quick update, quick announcement, guys. I have a new community number. So I got a second phone. You could directly text me. I'm answering all questions. My new phone number is 954-758-5473. Again, that's 954-758-5473. I'm answering all comments. Go ahead and text me now. Let's have a conversation.